Welcome to Click. I'm Spencer Kelly. Now on this programme we've talked at length about how social networking sites like MySpace and YouTube are attracting millions of users. So it should come as no surprise that something as popular as social networking has spawned a new business idea that also has the word social in the title. Katie Ledger explores social money lending.
Pouring your hard-earned cash into the far reaches of the World Wide Web may sound like a crazy idea. After all, the internet has seen its fair share of nasties, from phishing emails posing as our bank to keylogging software, pinching our passwords and personal information, all in an effort to steal our identity and cash. But now there are a few sites trying to convince us that the web is the place for your money to be.
The concept is called social lending, and the idea is for people who have money and are willing to lend it to people who want to borrow money, thus cutting out the middlemen like the banks and the mortgage companies.
Zopa.com is a pioneer in this space. For the past 2 years, it's allowed members to borrow and lend money on their own terms. Gerald Dawson is a finance director with a bit of spare cash that he'd like to invest. And this is Alison Daniel. She's an HR advisor at a magazine publishing company. She's desperately looking for a loan to pay off her overdraft.
So I looked at my bank and the other various banks of where to borrow the money from, and then I heard about Zopa and looked at the calculator online, and the rates came up very cheaply, so I opted for Zopa.
The site itself is very easy to use. After both the borrower and the lender have registered, they choose what rate they'd like to borrow or lend at. And if the rate they choose corresponds, then the site brings them together. But how trustworthy is the site? And will Gerald get his money back?
We fully verify an identity and credit and fraud and risk assess every lender and every borrower coming to Zopa. So it's a community of known individuals. And Zopa's role is to provide a place where those people can connect with each other and borrow money and lend money on their own terms.
To minimise risk, Zopa will spread your loan among several borrowers. Let's say you're lending £500, then your money will automatically go to 50 different people.
When they tell you your expected return on a loan, they factor in the anticipated bad debt. So, for example, in one of the markets there's a bad debt rate of 1.4%, and they factor that into your return. So your return, in my case, of maybe 6.5%, is after the bad debt. And if that bad debt doesn't happen, I make even more. But if it does happen, I'm still making the money I thought I would make.
So think of Zopa like eBay for money.